Partnership accounts. Illustration on allocation of profits among partners where capitals are fluctuating and fixed. Illustration. A and B are partners sharing profits in proportion of 7 by 10 and 3 by 10 with the capitals of Rs 15,000 and Rs 10,000 respectively. 5% interest was agreed to be calculated on the capital of each partner, and B is to be allowed an annual salary of Rs 2,400 which has not been withdrawn. During the year 2021, A withdrew Rs 1,200 and B 2,000 in anticipation of profits. The profits for the year prior to calculation of interest on capital but after charging B's salary amounted to Rs 8,000. A provision of 7.5% on the amount is to be made in respect of commission to the manager. Show the partners' accounts where the capitals are fluctuating quantities, where the capitals are fixed quantities, and the account showing the allocation of profits. Solution. Calculation of profits. The profits for the year prior to calculation of interest on capital but after charging B's salary 8,000. Less interest on A's capital 15,000 into 5% 750 rupees. Interest on B's capital 10,000 into 5% 500 rupees. Total 1,250. 8,000 minus 1,250 6,750. Less 7.5% commission to manager 8,000 into 7.5 by 100 600 rupees. 6,750 minus 600. The balance profit is 6,150. So A's share of profit 7 by 10 share out of 6,150 is 4,305. B's share of profits 3/10 out of 6,150 is 1,845. Total 6,150. Where the capitals are fluctuating, A's capital account and A's drawing account. In A's capital account, January 1 by balance brought down 15,000. December 31 by interest 750 rupees. December 31 by profit and loss appropriate account 4,305. On the debit side, December 31 to drawings account to transfer 1,200. This in contra will appear in the drawings account. On the credit side, December 31 by capital account transfer 1,200. On the debit side to balance brought down 18,855 and this is to be carried forward for the next month. January 1 by balance brought down 18,855 in A's capital account. Similarly in the drawings account on the debit side to bank 1,200. Solution. A. Where the capitals are fluctuating, B's capital account and B's drawing account. B's capital account on the credit side January 1 2021 by balance brought down 10,000 rupees. December 31 by salary 2,400. December 31 by interest rupees 500. December 31 by profit and loss appropriation account 1,845. Total 14,745. B's capital account on the debit side to drawings account transfer 2,000 and in the drawings account on the credit side by capital account transfer rupees 2,000. B's capital account on the debit side to balance carried down 12,745 and this is to be brought down for the next period 2022 to January 1 by balance brought down 12,745 in the drawings account on the debit side to bank 2,000 rupees. Solution B. Where the capitals are fixed, A's capital account and A's current account. A's capital account on the credit side 2021 January 1 by balance brought down 15,000. A's capital account on the debit side 2021 December 31 to balance carried down 15,000 rupees and this should be carried forward in January 1 by balance brought down 15,000. Other transactions will not be entered in this account because the capitals are fixed and not changing. A's current account on the credit side December 31 2021 by interest on capital 750 rupees. A's current account on the credit side December 31 by profit and loss appropriation account 4,305. Total 5,055 rupees. A's current account on the debit side December 31 to bank 1,200 rupees. A's current account on the debit side to balance carried down 3,855 and this should be brought forward for the next month, January 1, by balance brought down 3,855. B's capital account and B's current account where the capitals are fixed. B's capital account on the credit side by balance brought down 10,000 rupees. B's capital account on the debit side to balance carried down 10,000 rupees and on January 1 it is brought down by balance 10,000 rupees. B's current account December 31 by salary 2,400 rupees. B's current account credit side by interest on capital 500 rupees. B's current account on the credit side by profit and loss appropriation account 1,845, total 4,745. B's current account on the debit side December 31 to bank 2,000 rupees. B's current account on the debit side to balance carried down 2,745, and this should be carried forward for the next month January 1 by balance brought down 2,745. Now let us record profit and loss appropriation account. On the credit side 2021 January 1 by profit and loss account transfer 8,000 rupees. On the debit side 2021 December 31 to 7.5% commission to manager 600 rupees. On the debit side to interest on capital on A's capital account 750 rupees, on B's capital account 500 rupees, total 1,250 rupees. On the debit side to net profit transfer to partners capital accounts A 7/10 share 4,305, B 310 share 1,845, total 6,150. Total debits and total credits are 8,000 rupees. In the next lecture, we will calculate division of profits when a new partner is admitted into the business.